Good evening. As always, I hope you all had a great day. Today the market was mixed, but it was mostly poor and quiet, as Washington continues to struggle in their stalemate to make any progress on a coronavirus relief bill. Regardless, the Nasdaq was the only winner as the index rose 0.27% due to big tech names rising. The other two major indexes fell as the S&P 500 fell 0.2% and the Dow fell an even worse 0.29%. The biggest news of the day was from the Labor Department. Today they announced that the weekly unemployment claims totaled just shy of 1 million, coming in at 963,000 for the week ended August 8th. This is good news, as it is the first time that weekly unemployment claims have been under 1 million since the onset of the pandemic in March. On top of this, the number of people who are currently collecting unemployment benefits through regular state programs, which covers the majority of workers, also decreased and totaled 15.5 million. The decline in jobless claims indicates layoffs are easing and hiring is picking up, but it could also mean that there has been an increased amount of discouraged unemployed individuals as the $600 in enhanced benefits came to an end. Without the $600 weekly boost, payments dropped to the level set by states, which averaged about $330 a week for the 12 months through June. Even though Trump signed an executive order to provide the unemployed with an additional $400 per week, it may be weeks before states implement this, as they must apply for the federal funds and set up new programs. The Citi Economic Surprise Index, which shows how economic data compares to expectations, hit an all-time high this past month and has continued to remain around those levels. From the report released yesterday, the index totaled 250, down from the record 270.8, which it hit in mid-July. In short, what this means is that overall, the economic indicators have been far better than economists were expecting. This gives investors hope as the United States attempts to claw back from the horrors of the coronavirus pandemic. In its monthly oil market report, the IEA, or International Energy Agency, said that due to high coronavirus case numbers will continue to hurt demand and slow the recovery for oil, even though they are already suffering from low demand. This should not come as a surprise, as the price of oil hit all-time lows just a few months ago. However, the price has climbed fairly well since, but hasn't moved much in recent months. The agency expects global demand to contract by 8.1 million barrels this year, which is 140,000 barrels more than in last month's report. The price recovery also looks bleak, as global supply has been increasing due to Saudi Arabia ending their voluntary cuts. In addition, US and Canadian production are starting to rise again. Brent crude oil, the global benchmark, is currently trading around $45 per barrel. We saw the mixed but overall poor performance today throughout the various sectors, as only tech and consumer goods ended in the green, albeit by just a little. Oil and gas was the clear loser, as the sector lost nearly 2%, while financials also fell close to 1%. Value was destroyed today, as all sizes lost around a whole percent. Growth was the clear winner, which makes sense, as tech names were pretty much the only stocks that ended in the green. Large cap core gained, but besides that, the other sizes had a poor day. The best performer in the S&P 500 today was Paycom Software, which is an online payroll and human resource technology company. Shares gained slightly more than 5%, but there's no news from the past few days regarding the company. The other great day was had by electronics company Keysight Technologies, which had shares rise by 3.65%. This move seems to come after the company was able to earn a security certification that allows federal and regulated industries to strengthen network visibility and security. The worst performer today was Cisco Systems, as shares fell a whole 11.19% after they reported earnings yesterday after the market closed. Their quarterly earnings were actually positive, as they had a beat on both top and bottom line estimates. The large negativity came from the outlook that the company provided afterwards. As you can see, The guidance that was provided by the company is severely under what consensus estimates were. The other loser was HollyFrontier, which is a petroleum refining company. Shares dropped by 6.25% during regular hours trading. This fall was due to the company being removed from the MSCI USA index. Getting into earnings, we'll start off with Tapestry, ticker symbol TPR, which is a luxury clothing company that owns brands such as Coach, Kate Spade, and Stuart Weitzman. The company posted a good surprise on both top and bottom line estimates. Non-GAAP EPS was a loss of 25 cents per share, which beat by a large 35 cents. Revenue beat estimates by $39.65 million as they tallied quarterly revenue of $714.8 million. However, they obviously were not spared by the pandemic as it was down 52.7% on a yearly basis. Adjusted gross margin was also a nice beat due to strong e-commerce growth as digital sales grew by triple digits on a yearly basis. Shares ended in the red by slightly more than 1% after this morning's earnings. Next up, we have Baidu, ticker symbol BIDU, which is essentially China's Google, as the company specializes in internet-related services and artificial intelligence. Overall, the company's earnings were positive. They beat non-GAAP EPS estimates by a nice 66 cents, as they had a gain of $2.08 per share. Revenue fell 1% during the pandemic, as they missed estimates by a marginal $30 million, as revenue totaled $3.69 billion for the quarter. Shares are deep in the red after their earnings this evening. Next up, we have Applied Materials, ticker symbol AMAT, which is a supplier of equipment and software for the manufacturing of semiconductors. The company had good earnings this afternoon as they posted a double beat. Non-GAAP EPS was a gain of $1.06 per share, which topped estimates by 11 cents. Revenue grew by a large 23.6% on a yearly basis, as revenue totaled $4.4 billion and blew past estimates by $230 million. To top this all off, Applied Materials provided guidance that came in above estimates by a good margin. Shares are trading in the green after the nice earnings and positive guidance. Lastly, we have Purple Innovation, ticker symbol PRPL, which is a company that designs and manufactures products such as mattresses, pillows, and other comfort products. The company recorded a GAAP loss of 11 cents per share, while they were expected to be GAAP positive, as it missed estimates by 29 cents. Revenue grew an impressive 60.3% on a yearly basis, as quarterly revenue finished at $165.1 million, but still missed estimates by $10.78 million. No formal guidance was issued, but company executives said that the positive momentum in the second quarter carried over into the third quarter. Shares are down nearly 8% after the earnings miss. That is all that I have for tonight. Hope you enjoy the rest of your evening. I look forward to seeing you tomorrow as we will have reached the end of the work week.